Okay, right. Then we'll come to the today's plan. So today we will explain you the test plan and some model questions, right? So we will take the discussion, right? So we can take around 1 hour prior to the lunch break, and after lunch break, we'll continue. Say around 4 o'clock, we'll be able to continue, and we will comprehensively discuss the test plan, the area that you will be tested in examination context, and the main type of question, some type of revision, right? So I'll be doing today. So we have covered the last topic also that we finish it, right? Anything remaining in the last topic? අපි අන්තිමට කතා කරපු topic එකේ මොනවා හරි ඉතුරු වුණාද? අපි complete කරා නේද?
ඉතුරු නැහැ සර්.
නෑනේ, right. එහෙනම් අපි යනවා test plan එකට, right? So this is our test plan, right? So you will be given a paper with 5 questions. Each question carry 25 marks. So you have to answer only 4 questions, right? So the question number 1 will start with divisional performance. Divisional performance. Hope that you can remember that we start this discussion with divisional performance and transfer pricing topic, right? So that you will be tested question from this divisional performance. Basically, you need to identify the different type of responsibility centers, like revenue center, cost center, profit center, and investment center, right? These we categorize these divisions into 4 categories based on the manager's responsibility. If the manager is responsible for only cost, we call it a cost center. If manager is responsible only for the revenue, we call it revenue center. Then most of the time we find these profit centers where managers are responsible for both cost and revenue. Both cost and revenue. And you find the investment centers where managers are responsible not only cost and revenue, that is the profit. In addition to that, the asset invested in that particular responsibility center. So when it's come to this responsibility divisional performance, you will be tested it their performance measurement. So cost center managers are responsible for cost. Now, not all cost of the center. when we take whatever the responsibility center, whether it's a cost center, revenue center, profit center, or investment center, it is the responsibility. Manager is responsible for cost, revenue, or asset that are controllable by the manager. The manager control කරන්න පුළුවන් ඒවට තමයි ආ responsible. Right? Controllable by the manager. So cost center managers responsible for the cost come under control by manager. Revenue center manager is responsible for the cost which come under control of the management. Revenue come under the control of the management. Revenue only. Profit centers managers are responsible for both revenue and cost, which are controllable by the manager. So අපි සාමාන්‍යයෙන් profit center එක performance measure කරේ profitability margin වලින් gross profit, net profit, operating profit. එතනදී අපි කතා කරා මෙන්න මේ activity එක. Right? අපි මේ activity එක පොඩ්ඩක් නැවත මතක් කරගමු. Where you find both controllable and uncontrollable cost and revenue. So using that, you need to calculate the controllable profit. So the division X is a part of control company, both based on X land, where currency is dollars, X dollars. X is a profit center and export its all product to Y land, currency is Y pound. The cost of the division X incurred in dollars. So අපි export කරනවා dollars වලින් තමයි අපේ රටේ currency එක තියෙන්නේ. Maybe division එකේ එයාලා export කරන්නේ pounds වලින්. So the customers are invoicing pounds. ලංකාවේ ගත්තොත් අපි Sri Lankan rupees වලින් manufacture කරලා අපි export කරන්න පුළුවන් dollars වලින්. or invoice වෙන්නේ dollars. Then head office of the control company invested in new e-commerce platform, which significantly increased the efficiency of the division. At beginning of the final quarter, the dollar value fell by 8%. ඒ කියන්නේ ඩොලර් එක depreciate වෙලා තියෙනවා. දැන් ලංකාවේ නම් රුපිය එක ඩොලර් එකට සාපේක්ෂව depreciate වෙනවා වගේ. here dollar depreciate relative to the pounds. The manager of the division X currently appreciate that net profit margin of the division and awarded a bonus if it exceeds 7%. දැන්ට මේ මැනේජර්ට ගෙවන්නේ යා net profit margin එක 7% වලට වඩා වැඩි නම්. The manager complained that net margin is not suitable for appraising the performance. Recommend using appropriate calculation whether it is appropriate for the manager of the division X receive bonus or not. Right. Then target එක 7% profit margin එක. අපිට දැනට දීලා තියෙනවා revenue, cost of sales, gross profit, depreciation, overhead allocation of head office cost, other overhead, net profit 110. Revenue 2000. 110 divided by 2000, net profit margin 5.5. Target is 7%. So at present calculation, the manager is not getting. So you have to calculate this net profit margin by considering relevant revenue and relevant cost. So can you? And see whether you are getting 7% or more. Now this is 5% by just taking the profit of the division. There we have not considered the relevant cost and relevant revenue. The relevant cost එක ගන්නකොට මොනවද සලකන්න ඕන කියන එක අපි කතා කරලා තියෙනවා. relevant revenue එකට මොනවද කතා කරලා තියෙනවා. right? මේක අපි උත්තරෙත් කතා කරලා තියෙනවා. right? දැන් උත්තරේ බලන්න නැතුව පොඩ්ඩක් try එකක් දෙන්න බලන්න විනාඩි දෙක තුනක් අරගෙන. right? So we'll check the answer. Now here you have to consider this relevant revenue and relevant cost. Right? So what is relevant revenue? We'll go ahead with some calculation here. Now you are given the revenue for the period is 2000. Right? Revenue 2000. But you are given that at the beginning of the final quarter, the dollar depreciate by 8%. That means if you take the 2000 revenue, we can assume the revenue occurred evenly throughout the year. That means first one quarter revenue is 500. 500, 500, 500, last quarter 500. But this last quarter 500 you can't take as it is, because now what we are going to take, right? I'll do it this way. Now you take the net profit given 110. But this net profit include some non-controllable cost. What are the things we have to remove? This allocation of head office cost is not even traceable to this division. So which is not relevant now. This is head office cost. Then what about depreciation? Is it controllable cost for a profit center manager? Profit center manager is responsible for revenue and cost, not for asset. So depreciation is decided based on the asset base. So depreciation is a controllable cost for a you can take it as a controllable cost to a investment center, where the asset is come under the manager's control. But in a profit center, manager responsible only for income and expenses, not for asset. So depreciation is asset related expenses, non-cash. So that also irrelevant. So you have to, it's not controllable by the manager. So you can add back allocation of overhead, right? Head office overhead, non-traceable and non-controllable. Controllable නෙමෙයි, trace කරන්නවත් බෑ. Depreciation is non-controllable to a profit center manager. Then you can take the currency gain, exchange gain. The last quarter revenue is 500, 2000 divided by 500. But that 500 achieved with the dollar depreciation by 8%. And ඒක ඉවත් කරොත් අපිට revenue එක එන්නේ 500 divided by 1.08. 8% නිසා 500 divided by 1.08, that is 467. If this rupee depreciation, dollar depreciation didn't take place, it should be 467. So we got 500. We have a 37, which is negative, right? Minus. That means we'll get the controllable profit 263. Then the given revenue is 2000. From that you can deduct the currency gain. So you can have the controllable revenue, that is 1963. So the correct net profit margin based on controllable profit, which is 263 divided by 1963, which is 13.4, which above 7%. So we can ask, we can say that this manager is entitled for the bonus. Bonus target එක තමයි 7%, right? 7% තමයි target එක. But according to the original calculation, it is 5.5%, 110 out of 2000. But now when we consider controllable cost and profit, it becomes 13.5. So this manager is entitled, right? The profit cent එකක අපිට ওই විදිහට calculate කරන්න පුළුවන්. Okay, any question? Right? Then when it's come to investment centers, we have different measurement basis. You should consider the controllable profit as a percentage of divisional investment. We calculate return on investment, ROI, return on investment, right? ROI. Then the return on investment having some issues. Now return on investment, if you calculate for an example, return on investment of a business, say in 2023, controllable profit 200, the investment or the total asset of the division 1000, ROI 20%, right? Then this division get an opportunity for a new project which require capital investment of 500, and that has a positive NPV of 150 and the 2024 expected profit 70, right? So in that case, by accepting this new project, how much would be the ROI if this company, if this divisional manager accept this new project, and we assume the same profit continue for the next year. So the previous profit 200, it increased by 70. Asset base 1000, now asset base become 1500. So after accepting the new project, which gives you positive NPV of 150. So positive NPV project means this is a good project to the business, right? But when you are making a new project investment, immediately you may not get a very large profit. Here it's getting a significant profit of 70. Still, after accepting the project, ROI become lower, right? ROI are doing. So in that case, the manager of the division may reluctant to accept this positive NPV project because that may adversely affect for their performance. That is dysfunctional behavior of ROI. Right? ROI වල තියෙන weakness එකක් ඒක. මොකද ROI base කරලා performance evaluation කරද්දී even positive NPV project in initial period adversely affect to the divisional ROI because the project will generate revenue over the long run, right? So as a result, if the managers are evaluated based on ROI, then they will not accept some positive NPV project. So that will adversely affect to the overall objective of a firm, wealth maximization of shareholders. Positive NPV project එකක් කියන්නේ shareholders ලගේ wealth එක වැඩි වෙනවායි කියන්නේ. Right? Net value එකක් එකතු වෙනවා. හැබැයි divisional manager ගේ performance අඩු වෙන නිසා යාවක accept නොකරන්න පුළුවන්. ඒතර ඕකට solution එකක් විදිහට ගේනවා residual income. Where the controllable divisional profit reduced by imputed interest. We allocate some interest for the capital, right? That is investment multiplied by cost of capital. It's like the opportunity cost of investment, right? Then the remaining amount called residual income. Residual income. Now, if I take the same example here, right? This is a particular division where the cost of capital is 10%. We assume that cost of capital 10% here, right? If the cost of capital is 10%, then residual income in 2023, controllable profit 200 minus imputed interest 1000 total asset into 10% cost of capital. You get 100. Then if you take the residual income in 2024 after new project, now the controllable profit 200 plus 70. අපි මේ profit එක totally controllable කියලා මෙතනදී හිතනවා. 270. Now their capital become 1000 plus 500, 1500, 10%. That is 150. So now you see the residual income has increased. So if the performance of this divisional manager is evaluated based on return on investment, manager will not accept this project. But if the performance is going to measure based on residual income, now residual income compared with last year 100, this year 120, that's a favorable change. Favorable change. They will accept it. Okay. Right. Then the third measurement basis of investment centers, economic value added, EVA. So economic value added calculation, normally we can use this approach one. Right? Economic value added formula is net operating profit after tax minus capital charges. Net operating profit after tax minus capital charges. Capital charges obtained by weighted average cost of capital into opening equity. Then what is net operating profit after tax? So net operating profit after tax, you take the profit after tax and you have to add back depreciation and amortization. Because depreciation and amortization are non-cash expenses. So when you calculate operating profit after tax for the economic value added, we add back depreciation and amortization. Then we add back non-cash expenses like provisions. ඒවත් add back කරනවා. Then interestingly we add back R&D and investment, advertising, research development cost and advertising cost. Because when you take research and development, that will create some value for the business in the long run. Even advertising helps to create the brand image. Right? So here we add back those expenses and take net operating profit after tax. ඕකෙන් capital charges අඩු කරලා අපිට බලන්න පුළුවන් economic value added. Economic value added. ඊළඟට another area that you should focus here. Now when you are evaluating these centers, different responsibility centers. Now when you take a cost center, basically we can compare the actual cost and budgeted. That is the financial measurement. But cost centers are mainly like call centers, after sales service repair division, customer service center, something like that. So they are mainly incurring cost. They are not generating revenue. So if you are going to evaluate their performance purely based on cost, sometimes division can reduce the cost at a cost of dissatisfying the customers. So without providing proper service, you can reduce the cost. That is not good. So when you are measuring performance, you have to consider a lot of non-financial measures, especially customer focus, customer satisfaction. Then how long time to serve a customer queries processed per hour, right? Time spent for a customer. Then whether you have trained your employees to treat your customers politely, right? Whether that service will keep the customer loyalty, enhance the customer loyalty, the learning and innovation, the amount of time spent for the training, the new ideas implemented, those things. As non-financial measures, we should consider evaluating the cost center. Revenue center, mainly performance you can measure based on the revenue. Whether revenue increase compared with Profit center, you can calculate this profit margin, gross profit margin, operating profit, net profit. That is based on controllable profit. Even a profit center, you have some non-financial measures like customer focus, whether customers are satisfied, number of complaints, whether we can increase the profit while increasing the customer complaint. That is not good. Then the efficiency and productivity of the internal operations and any learning and innovation, like how much revenue you generate from new sales, new ideas, new product, likewise. So that is what you should know about divisional performance, right? ඔය අපි කතා කරපු main areas වලින් calculation plus theory ලකුණු 15ක question එකක් එනවා. Right? මේක පොඩි parts විදිහට එන්නත් පුළුවන්. Right? Divisional performance. Then we have the second part, transfer pricing. The transfer pricing වලින් ලකුණු 10ක් එනවා. Transfer pricing, we have discussed what is transfer pricing. Basically, transfer pricing is the price charged by one division when they transfer products from one division to another division. Right? So transfer price, the price at which goods or services are transferred from one division to another, from one member to another in the same group or same company. So that transfer pricing, why we need transfer pricing? Transfer pricing we need mainly for accurate performance measurement, you need transfer pricing. Then that will motivate the managers, right? Because if you take a factory, they partly complete a product and transfer, factory one transfer to second factory, and second factory transfer that into the sales outlet make the sales. So if you don't charge a transfer pricing and you just transfer the cost from factory 1 to factory 2, the total cost you charge from the sales outlet, the entire profit will be covered, come for the sales outlet. Organization point of view, it doesn't matter, but when you are evaluating the managers and motivating those managers, you should recognize some profit for factory 1, factory 2 separately, and finally outlet. For that, we need to consider some transfer pricing. Factory 1 might produce a product at a cost of 1,000 and you keep a 20% markup and you decide your transfer price 1,200 to factory 2. Then factory 2 is spend another 500, then the total cost becomes 1,700. You transfer it for 2,000 to the outlet. So that factory 2 also keeps some profit. So that will help for accurate evaluation of the managers as well as motivate the managers. That help to achieve the goal congruence. That organization divisions are working to achieve the overall objective and allow managers for certain autonomy that will motivate the managers, and you can have better performance evaluation. Better performance evaluation. Right. So transfer price එකක් decide කරද්දී අපිට cost plus pricing use කරන්න පුළුවන්. cost එකට markup එකක් add කරලා. ඒ වගේම market price based approach එකක් යන්න පුළුවන් market price එක මත. එහෙම නැත්නම් ඔය දෙකේම තියෙන අඩුපාඩු ඒක වළක්ව ගන්න අපිට පුළුවන් මේ දෙක අතරමැද negotiated level එකකට මේ price එක decide කරන්න. ඔය ටිකෙන් තමයි මේක අපි session දෙකක් වගේ කරා. ඊට පස්සේ මේක වෙනම activities උත් කතා කරා. Right? Major part divisional performance, transfer pricing. you will get one main question. Divisional performance 15 marks, transfer pricing 10 marks. Right? Okay. With that, we can have the lunch break. After that, I'll take these remaining questions. ඒවට තව සමහර අපි අලුත් activities කීපයකුත් කතා කරනවා, some model questions for the remaining areas. Right? So we'll start at 1 o'clock after the lunch break. So lunch break එක දෙනවා. Lunch break එකෙන් පස්සේ අපි 1 o'clock වලට පටන් ගන්නවා. Right? Start at 1 o'clock and continue. Right. So we will start after the break. So we will take the remaining area of the test plan. Right. So we had this we will take some questions then from capital investment decisions. The advanced aspects of capital investment decisions. There we discuss about this inflationary adjusted. NPV calculation, and in addition to that we'll take some capital investment decision activities with some kind of
Sir, screen is not shared.
okay, I'll share the screen. Is there any problem in accessing to LMS? I had some problem today. LMS not working or something. Just check. Okay, this time it is okay. Right. So what I will do, I'll take some model questions. After the discussion, I will upload these model questions to the LMS, right? We have a few more members, right? So I hope that others also will join, because it's better to lively participate for these activities, right? Rather than thinking that you can do it later by looking at the record, right? So that won't work. That is because normally these large duration records are not very effective if you have not participated the lecture, right? So you can do it in unavoidable circumstances, right? You unable to attend, that is okay, right? Rather than not to having it may be worthwhile, but other than that, always it's very important if you can lively actively participate, right? So we were in the test plan. Right, I'll come back to the test plan. Right, the question number 2, you will get a question from decision tree. So today I'm not going to work out a decision tree activity, because we had decision tree activities in detail, I think last time when we met. Right, I told you that examination also will be tested with similar decision tree question, right? Not that complicated for the examination point of view, right? You will be given some 2 scenarios, right? Where that the best outcome and most possible, and the other, or the high demand, low demand, likewise. Right, how to draw this and calculate the NPV of the each decision. So you can go through that activity. We discussed in the lecture, we had 2 detailed activities, right? Very similar one will be tested for the examination. Then I am moving to this capital investment decisions, advanced aspect for 15 marks. Basically will be tested 2 type of questions. One part, this type of question where that you are asked to calculate the net present value using nominal cash flows and net present value using real cash flows. So company is planning to invest in a new project which require initial cash outflow 900 million. Project duration 3 years and expected net cash flows in real terms are as follows. Cash flows in real term. Expected inflation rate is 10% and applicable discounting factor 15%. Discounting factor 15%. Calculate the net present value using nominal cash flows. So that real cash flow you need to convert into nominal cash flows. Then only you can apply the nominal discounting factor. Right, discounting factor 15%. We'll make it applicable nominal discounting factor 15%. So the first thing what you have to do, you have to take this right. So we can have it for 3-year period, and we can have the year 0, 1, 2, 3. Year 0, initial cash outflow 900. Then inflation. Inflation adjustment. Take the inflation adjustment. Now these cash flows are inflationary adjusted cash flows given. So inflation adjustment for 10%. Now these are real cash flows given. So year 0, no change, you take as it is. One වලින්ම ගන්න පුළුවන් මේ. Right? Inflation adjustment එක 1. Year 1 වල එක දැන් real cash flow එක තියෙන්නේ. එතන මේක inflation rate adjust කරන්න නම් මේක වැඩි කරන්න ඕනේ 1.1 වලින්. Year 2 එකත් මේ discount කරපු cash flow එක තියෙන්නේ. So you have to make it nominal. You have to multiply it by 1.1 to the power 2. So 1.1 to the power 2 means 1.1 multiplied by 1.1. 1.21. අපිට ඩෙසිමල් 4කට වගේ සාමාන්‍යයෙන් ගන්න පුළුවන්. 1.1 to the power 3. So easily you can take this 1.21 multiplied by 1.1. 1.3310. May net cash flows real, right, in rupees million. Now when you multiply it by this inflation adjustment, you will get the net cash flows nominal. So this cash flow multiplied by this adjustment. Then we have applicable nominal discounting factor 15%. So discounting factor. %. Year 1, 0. Year 0, 1. Year 1 wala discounting factor එක හොයනවා 1 divided by 1.15. 50%. Second year 1 divided by 1.15 to the power 2. So you can take it year 1 value again divide by 1.15. And year 3 discounting factor 0.75 divide by again 1.15. right? You should know that arriving this discounting factor, right? You might have learned this in your finance subjects, right? මේක කැල්ලකින් හදලා ගන්න දැනගන්න ඕනේ. සමහර ගානක දෙන්න පුළුවන්. නමුත් හැම ගානෙම දෙන්නේ නැහැ. right? discounting factor එක බැරි වීම නිසා සම්පූර්ණ ගාන හදා ගන්න බැරි තැනකදී සමහර වෙලාවට දෙන්න පුළුවන්. නමුත් දැන් මේ වගේ ගානක බොහෝ වෙලට දෙන්නේ නැහැ. right? එන ඔය nominal cash flow එක හොයාගෙන ඊට පස්සේ discount කරන්න discounting factor එක හොයාගන්න පුළුවන්. year 0 1. Year 1 1 divided by 1.15. Year 2 1 divided by 1.15 to the power 2. Power 2 එක බලන්න පුළුවන්. Year 1 0.896 multiplied divide by 1.15 again. Year 3 වල year 2 0.7561 divided by 1.15. Then we can have the discounted net cash flows. And ignore decimals, and finally NPV. We have ended up with 194 positive NPV. So we can ask to accept the project. Accept the project. This is based on nominal cash flows. You are given the real cash flows, so we convert them into nominal cash flows, then we discount and take the discounted net cash flows and the net amount, net present value. Right. Then we have this capital investment decision. So inflation adjustment, right? So when we have real cash flows, this is how we convert them into nominal cash flows. Then how you calculate the real discount rate? The real discount rate එක අපි හොයනවා nominal discount rate 1 plus nominal discount rate divided by 1 plus inflation rate. From that you deduct 1. Right? So මේ ගානේ real discount rate එක හොයන්න පුළුවන් අපිට. $1.15 divided by 1.10. එකෙන් කාඩු කරනවා. Right? So 1.15 divided by 1.1. 0.4545. Then අඩු කරනවා 1. percentage එකක් විදිහට බැලුවොත් 4.55. right? 2 decimals වලට අපි ගමු. right? 4.55. නැත්නම් මේ 0.4යි 5යි 4යි 5යි ඕකනේ එන්නේ. තව එකක් ගියොත් ඔය විදිහට 5යි 4යි 5යි. right 0.4545 0.04545. දැන් මේ ඩිස්කවුන්ටින් ෆැක්ට් එක ඇප්ලයි කරොත් අපි රියල් කෑෂ් ෆ්ලෝ එකට මේක ඩිස්කවුන්ට් කරන්න පුළුවන්. දැන් කොහොමද discounting factor at 4.454 මොනේනේ 545 මේ පළවෙනි අවුරුද්දේ 1යි දෙවෙනි අවුරුද්දේ 1 බෙදන්න ඕනේ 1.4යි 5යි 4යි 5යි 1.04545 1 divided by 1.04545 ඊළඟ අවුරුද්දට ගියාම මේක නැවත ආයෙ බෙදන්න ඕනේ 1 divided by 04545 third year එකට ගියාම ආපහු බෙදන්න ඕනේ 1 divided by 454 හරි නේද තුන්වෙනි අවුරුද්දේ this again divide by 1.545 so you should ended up with the same NPV. This is using real cash flows and real discounting rate. It's a real discounting factor. උඩේකට අපිට ඕනනම් කියන්න පුළුවන් nominal discounting factor. සාමාන්‍යයෙන් කියනකොට NPV වල discounting factor කියන්නේ nominal. But when we have the inflation readjustment, you have to differentiate. So nominal cash flow with nominal discounting factor. Real cash flow discounted by real discounting factor. Real discounting factor හොයාගත්තට පස්සේ බලන්න discounting cash flows මේ දෙක සමානයි. Right? Real cash flow discounted by real discount rate should equal to nominal cash flows discounted by nominal discount rate. See 287, 287, 457, 457, 350, 350. Right. Then we are moving to this model question 2. A project require initial cash out for 18 million for equipment. Capital allowance rate. The capital allowance rate means the tax depreciation rate of the asset used in the project. 33.33. Right, project require initial cash outflow of 18 million for, we can say, property, plant and equipment. Equipment කියලා ගමු project එකක් නේ. Capital allowance rate used for the asset use වෙනත් විදිහට කිව්වොත් plants use 33. That means this 18 million will be depreciated for tax purpose over 3 years, 6 million each. Depreciate over 3 years for income tax purpose. Right, 33.33. Now it out to depreciated. Because it is 33.333 recurring, right? So normally you can say 33.33 means annual depreciation for tax purpose here 1/3. Income tax rate 30% taxable. The project required rate of return 12%. Annual cash inflow and outflow over the project period given. Cash inflow, cash outflow given. And discount rate. Required rate of return is available at discount factor table. 12% is given below. You want 12%? Right. Discounting factor. F. 12%. Right. Then අපෙන් අහනවා calculate accounting rate of return of project. And comment on acceptability of the project. Based on NPV. Right. ARR, payback, discounted payback, net present value. Right. The cash outflows are given before deducting income tax payment. Income tax payment. එහෙනම් අපිට ඉස්සරලාම මේකේ accounting profit එක හොයාගෙන taxable profit එක හොයාගෙන right මේකේ මෙහෙම කරමු ARR හොයන්න ඕනේ accounting rate of return. For that you need accounting profit. Accounting profit. Then payback, discounting payback and net present value, you need the net cash flows. Right? So here we have cash inflows and cash outflows. So we'll go ahead with this. Over 5-year period. Cash inflows, cash outflows තියෙනවා. ඕකෙන් තව අඩු වෙන්න වෙනවා income tax. මේ outflow එක ඇතුලේ අපිට කියනවා income tax දීලා නැහැ කියලා. Then we can have the net cash flows. Right. Income tax payment. We can assume the tax of a particular year paid in that particular year, then net cash flow. ඊළඟට accounting profit එක හොයා ගන්න ඕනේ අපිට. accounting profit එක හොයා ගන්න නම් profit before tax එක හොයා ගන්න වෙනවා. ඒක අපිට ගන්න පුළුවන් cash inflow, cash outflow. Depreciation has not been deducted here. So that depreciation you can deduct depreciation expense. Then you will get profit before tax. Then we can have income tax expense and profit after tax. Before tax, income tax expense. Then profit after tax. All these are workings, right? මේවා අපිට ඕනේ ARR හොයන්න profit after tax ඕන. එතකොට income tax expense එක හොයාගන්න වෙන්නේ ඒකටත් වෙනම working එකක් ඕන වෙනවා අපිට. Cash inflow, cash outflow ඕකෙන් deduct කරන්න පුළුවන් taxable allowance, capital allowance, depreciation allowance. Capital allowance, that is the depreciation for tax purpose. Then you will get taxable profit. Taxable profit. For the taxable profit, you apply tax rate. Then you will get the tax expense. Right. මේ ගානට මේ workings ටික ඔක්කොම ඕන වෙනවා, right? I'll first give you some time to take down this working. පළවෙනි working එක තමයි net cash flow එක හොයාගන්න working එක. හැබැයි net cash flow එක හොයන්න tax payment එක හොයාගන්න වෙනවා. Right. ඊළඟට profit එක හොයාගන්නත් tax payment එක හොයාගන්න වෙනවා. tax payment එක හොයාගන්නේ නැතුව මේ දෙකම හොයන්න බෑ. tax payment එක හොයාගන්න නම් මෙන්න මේ tax working එක මුලින්ම ඕන වෙනවා. දැන් ඕන නම් අපිට tax working එකෙන් පටන් ගන්න පුළුවන්. Taxable profit, income tax rate, and income tax expense. අපිට මුලින්ම ඕනේ ඕක tax expense එක හොයාගන්න එක. Shall we do that first? The initial investment is 18 million. Can you complete the income tax expense here? 18 million and the capital allowance 33.33%. Tax rate 30% කියලා දෙනවා. So simple activity, first calculate the income tax expense. right? Now capital allowance 18,000. Take 6,000. So cash outflow එකත් minus දාන්න වෙන්නේ අපිට. Right? Minus $6,000 minus depreciation only in the first 3 years. Capital allowance only applicable for 3 years because it is depreciated at 33.33. Then you take the taxable profit. So first 2 years taxable profit they make us minus ne. So first 2 years which is negative. So taxable profit is a loss. So when it is a loss, taxable profit negative, income tax is 0, right? Negative එකට 30% බලලා in මේ government එක අපිට ගෙවන්නේ නැහැ නේ, right? If you have a tax loss, that's it. ඔන්න මේක taxable profit or loss කියලා ගන්න පුළුවන්. ඒක loss එකක් තියෙනවා නම් අපි tax ගෙවන්නේ නැහැ එච්චරයි. දෙවෙනි අවුරුද්දේ loss එකක්. ඒකින්ද 0. තුන්වෙනි අවුරුද්දේ ඉඳලා taxable profit multiplied by 30%. So income tax expense is applicable only for year 3, 4, 5. 3, 4, 5. Right? අදට දැන් income tax expense එක මේ විදිහට අපිට හොයාගන්න පුළුවන්. This is income tax expense. First 2 year no tax expense. right. එතකොට අපිට ඔය tax expense එක ගේන්න පුළුවන් profit එක හොයාගන්න working එකේදී මේ විදිහට. හැබැයි දැන් අපිට ඕක minus කියලා ගන්න වෙනවා. දැන් profit එක හොයද්දි tax එක අඩු වෙනවනේ. අපි මේක minus negative value එකක් විදිහට ගියා. ඊළඟට cash inflow එකෙන් outflow එකත් අපි negative කියලා දාමු profit එක හොයන්න. This is minus. Then the accounting depreciation. Now this project period is 5 years. Capital investment 18 million. So 18,000. You are not given any scrap value or anything, right? So then 18,000 divided over 5 years. There is accounting depreciation. We want it for the profit calculation. May cash outflow එක ඇතුලේ depreciation නැති නිසා 18,000 divided by 5, 3,600 you can deduct. And you get profit before tax. And deduct income tax expense, you will get profit after tax. Profit after tax. Now you see the 5th year accounting profit before tax 1,400, but we have to pay 1,500 tax expense because that is paid based on taxable profit. එහෙනම් අපිට මේ profit ටික එකතු කරොත් අවුරුදු 5 total profit එක ගන්න පුළුවන් 8,500. So ARR can be calculated. Answer for the first part, ARR equal average profit, which is 8,500 divided by 5, 1,700 as a percentage of initial investment 18,000. Right? ඒ විදිහට ARR හොයන්න පුළුවන්. 700 divided by 18,000 as a percentage, you will get 9.44, that is ARR. ARR 9.44. Then we need cash flows, net cash flows, that is for payback, discounted payback and NPV. So for that, we can have this cash inflow, cash outflow, and cash outflows are given without tax expense. ඒක අපිට කලින් working එකෙම ගන්න පුළුවන්. So we can have the net cash flow. Net cash flow of each. Now, when you have the net cash flow, then we can have the payback, discounted payback, and NPV calculations. Right? I'll have a working for this. Year 1. Now we need this for year 0, including year 0. තව එකක් මෙහා පැත්තට දානවා. Year 0. See. Then I'm going to have the payback. Payback calculation, we can have this net cash flow. Right? Net cash flow. Year 0, 18,000 cash outflow. Then we can have the cumulative net cash flow. Cumulative net cash flows. That is year 0 minus 18,000. Year 1, this 18,000 plus 5,000. Still 13,000 to be recovered. 13,000 plus 5,000. 8,000 to be recovered. Minus 8,000 plus 8,100. So we have a small plus value end of year 3. So it's not exactly year 3, right? You can have the payback at equal, it is years and how many months? You can take it. We need 8,000 received 8,100 for the next year. Almost 3 years, right? So that years end, you take 8,000 divided by 8,100, right? 0.998 into 12, 11.85 months, right? Almost 3 years, 2 years and 11.85 months. Payback. Right. Then we move into the discounted payback. Right. The discounted payback හොයන්න එහෙනම් අපිට ඉස්සර වෙලාම cumulative cash flow එක නෙමෙයි අපි මේකේ present value එකෙන් හොයාගන්න වෙනවා. For that you are given discounting factor at 12%. Right. මෙන්න මේ discounting factor එකෙන් cash flows ටික වැඩි කරලා ගන්න පුළුවන්. Discounting factor at 12%. Sorry. Right. Then you can have the discounted net cash flows. Discounted net cash flows. Discounted net cash flows. Take this multiplied by the discounting factor. Now you can have the cumulative net cash flow. Now even after third year minus fourth year, still minus. Only fifth year, after fourth year it become plus. And then discounted payback period again. Discounted payback 4 years and 670 to be recovered in the final year. 670. But we have recovered 1986. 670 divided by 1986. So 670 divided by 1986, 387. So which is 4 years and 0.387 multiplied by 12. 4.04. So approximately you can take it 4 months, right? 4 months. 4 years and 4 months. මොකද මාස දශමයකක්වත් නැති නිසා ඕන 0.4 තියන්නත් පුළුවන්. Right, 4 years and 4.05 months, or you just say 4 months. That is the answer. Now 4 years and 4 months. This is discounted payback. Then the last one, NPV. So we can have the net present value. Once you calculate the discounted payback, discounted payback, discounted net cash flows ටික තියෙනවා. So you just take the total of that, no? So you just take the discounted net cash flows total. You ended up with 1000 net present value. 360. Now net present value, since it is positive, we can say that project should be accepted. NPV positive, so we can asked to accept the project. දැන් මේක අර මුල workings ටික වැරදුනොත් හැබැයි අනිත් ටික වරදිනවා. ඒ කියන්නේ tax එක හොයාගන්න ඕන හරියට. ඊළඟට depreciation, accounting depreciation, tax depreciation ඕන tax එක හොයාගන්න. ඒ අනුව accounting profit එක හරියට හොයාගන්න ඕන ARR හොයන්න. ඊළඟට income tax එක ඕනේ. net cash flow එක හොයන්න. right? So now we are in the test plan. So covered the two questions, right? Additional performance transfer pricing, 25 marks. Decision tree and capital investment decision, these are advanced aspects, 15 marks. Then the relevant costing and the short-term decision making will tested for 15 marks question, which is relevant costing, short-term decision making. Right. So you'll be tested some of these knowledge about this relevant cost, irrelevant cost, sunk cost, right? Identification cost, right? For an example here, a company is considering to selling an old machine. Machine had a book value of 200,000. In evaluating the decision to sell the machine, the book value that is based on the past purchase price, so which is sunk, irrelevant. An alternative to hold machine, company can rent a new one. It will cost 300,000 per year. In analyzing cost volume behavior, rental is a fixed cost that won't vary with the production. To run a firm's machine, right? Okay, let me take this one. To run a firm machines, there are two alternative course of action. One is to pay operator a base salary plus small amount per unit produced. So the employee කෙනෙක්ට ගෙවනවා operator fixed base salary and amount for unit produce. දැන් අපි මේ වෙලාවේදී ඒකට කියනවා semi variable cost. Semi variable means you have both fixed and variable part. Then as an alternative, firm can pay operator a flat salary. It would use one machine when volume is low, two machine when it is expanded, three during the peak period. This means total operator cost would be then operator ගෙවන්නේ fixed salary එක. හැබැයි peak period එකට machines ගාන වැඩි වෙනවා. එක machine එකයි දෙකයි තුනයි. එතකොට එතන එන්නේ semi fixed cost එක. ඒක fixed. හැබැයි machine දෙකක් වෙනකොට තව වැඩි. ඒක step එකක් විදිහට වැඩි වෙන step cost කියන semi fixed. Then the machine mentioned in one could be sold for 80,000. If the firm considering retaining and using it, 80,000 is an opportunity cost of using the machine because you could have sell it. The value of next best alternative given up. So that is opportunity cost. 80,000 opportunity cost. Number 6. If firm wishes to use machine any longer, it must be repaired. For the decision in retain the machine, the repair cost so The firm wishes to use machine no longer, it must be repaired. The machine එක repair කරන්න ඕන. And the repair cost what is it? ඒක incremental cost එකක්. machine එක repair කරොත් what happen? It has stop sharing. Right. So if the firm wishes to use the machine no longer, must be repaired. So you have to prepare if you are going to continue it. So it's an incremental cost. And machine to be charged for a foreman, each department at a rate of 30,000 per year. When evaluating a foreman, the machine charge is not controllable to the foreman. Foreman අදාළ cost එකක් නෙමෙයි. ඒ rate එකට charge කරන එක. Right? ඒක foreman කෙනෙක්ට ඒ machine එකේ cost එක බෙදලා දෙනවා. So that is a non-controllable cost. Right. මේ වගේ conceptual knowledge එක වැදගත්. Then this type of application of limiting factors, right? The application of the limiting factors. I think P had some activity. We'll take some model question from this as well. So we'll take an activity. Next question from limiting factor, which we can take question number 3. Take this one. Right, similar activity we had earlier also, right? Shall we attempt this one? It's like this. Question 3. The Venus PLC manufacture and sell 3 different product range, namely black, white, red. The following information is provided for next month. Black, white, red, selling price, material cost at rupees 400 per kilogram, labor cost 300 per kilogram, budgeted sales per quarter 4,000, 5,000, 3,000. Right? 3 products. Calculate the optimum product mix if the direct material is limited to 23,000 kilograms per month. Calculate the optimum product mix if the direct labor is limited to 34,000 hours per month. Prepare a statement showing maximum profit calculation if direct labor is limiting factor and total fixed cost is 5 million. Can you attempt this one? මේ වගේ activities කතා කරලා තියෙනවා, right? Limiting factor. Can you go ahead and complete this? Can take around 10 minutes. So we'll first take. Now you need you have selling price, material, labor cost per unit. So we can calculate the contribution of each product, right? So this way, direct material per unit. So you have selling price and two variable cost. So contribution per unit. Then we need contribution per 1 kilogram raw material. Contribution per 1 kilogram of raw material. Based on that, we can rank. Right? So from the selling price, we can deduct material and labor cost. So get the contribution per unit. But you cannot decide based on contribution per unit. You need to take contribution per raw material. ඔන්න මේකට කලින් තව එකක් හොයාගන්න පුළුවන් how many raw material kilograms per unit. So direct material cost 400 per kilogram, 800 per kilogram, 400, cost is 800. That means we need 2 kilograms. White also 800, 2 kilogram. Red 3 kilograms. Now 1000 divided by 2. Contribution per raw material kilogram. Then 700 divided by 2, 800 divided by 3. So now you can rank black 1, white 2, red 3. This is the rank. That means we have to first produce black. Budgeted sales per black 4,000 unit. Right?
Sir,
Total raw material.
Sir, item 3 should be 5. Red RN kg per unit.
Sorry, that is 800, 800 is 5. Right. 160. Right. So first rank. Now, how many total raw material available? Raw material total, the question said, if the raw material is limited to 23,000 kilograms, right? 23,000 තමයි ඔක්කොම තියෙන්නේ. Right? දැන් අපි number 1 අපි හැදුවොත් production and the raw material usage. If you select number 1, 4,000, so maximum demand we can go 4,000 per unit 2 kilogram. So 4,000 into 2, we need 8,000. Out of this 23,000, we need 8,000. We need 8,000. Then 5,000. So we need 5,000 into 2 kilograms again. We need another 10,000. So altogether, we have utilized 18,000 to produce from black 4,000 and white 5,000. So we have remaining only 5,000 kilograms of raw material. So remaining 5,000 to red, we need 5 kilograms per unit. So we can have the production mix, the profit maximizing production mix. Can have it 4,000, 5,000 and 1,000. Right. Make a total sales as per the budget 4,000. අපි 4,000 හදලා විකුණනවා. එතන raw material 8,000 යනවා. and 5,000 තියෙනවා white. So we can produce 5,000. So we take another 10,000 kilograms, 2 kilograms per unit. So 10,000, 18,000 we have used. Then finally, that means out of the 23,000, 18 used means we have only 5,000 remaining. Per unit we need 5 kilograms. So we can produce maximum production mix, profit maximizing product mix is black 4,000, white 5,000, red 1,000. Then the part B, if the total direct labor limited to 34,000 hours, so we can prepare similar schedule for the labor. Now we can go ahead up to contribution same. Then instead of raw material, direct labor hours per unit. Direct labor hours per unit. So we have 300 labor hour, hourly rate 300. So 1,200 means it requires 4 hours. White 600 rupees, 300 means 2 hours, and 1,200 means again 4 hours. Now when you rank this, white first, black second, and red third. Right. Now you first produced 5,000 of white. Produce 1 unit, you need 2 hours. So 5,000 into 2. Now we have a total number of hours. Here 34,000. Right? 34,000 තියෙනවා මුළු පැය ගන්න. So when you produce 5,000 units of white first, we have utilized 10,000. Then we can produce 4,000 units of black. 4,000 into 4. 16,000 we have utilized. So altogether 16,000. This is direct labor hours. Now 26,000 we have used, so that means we have only 8,000 hours to produce red. To produce 1 unit, you require 4 hours. So 8,000 divided by 4. Profit maximizing product mix, black 4,000, white 5,000, red 2,000. Then the third part, prepare a statement showing maximum profit calculation if the direct labor hour is the limiting factor and the total fixed cost is 5 million. So you can have the profit maximizing product mix now. Right, profit maximizing product mix. Then contribution per unit. මෙතන අපි total එක බලන්න පුළුවන්. Black, white, red. You can do it other format, right? Vertical format. I just use this given information. Then contribution per unit. The number of units, right? Contribution per unit. You can find contribution per unit of each product. This, and here we can have the total. So the total contribution. So the total contribution is just selling price multiplied by per unit contribution, and you can have the total. So if you want, you can make it rupees 1,000 also. $4 million from black, 3.5 million from white, 1.6 million. So the total contribution of the company, right? May total like a, then you can have the fixed cost. Total fixed cost. you deduct, you're given the total fixed cost 5 million. When you deduct total fixed cost, you can have the net profit. Finally, the firm can earn a profit of 4,100,000. Right, this is the statement. There is no specific format. You can have it in the other way. Right, පහළට පෙන්නලා හදාගන්න පුළුවන් product තුන. ඒක ප්‍රශ්නයක් නෑ, කැමති විදිහට හදන්න පුළුවන්. Okay. Right. ඊළඟට strategic cost management. You'll be tested some theoretical question, basically strategic cost management. Where we discuss some of these concepts in strategic cost management, like strategic cost management. Yeah, this one. Right. Strategic positioning, cost driver analysis, value chain analysis. Right. So traditional cost management and strategic cost management, the differences, right? And cost, 3 generic strategies: cost leadership, product differentiation, focus strategy, right? So the difference between those strategies, then traditional cost management versus the strategic cost management. Strategic positioning analysis, cost driver analysis, and value chain analysis, conceptual, theoretical aspect, right? So here ADI King question එකක් තියෙනවා. මොකද මේකේ අපි අර value chain analysis එකත් එක්ක decision making link කරලා activity දෙකක් විතර අපි class එකේ කතා කරා. මම එදත් කිව්වා මේ mode එකේ scenario එකක් exam එකකටත් එනවා. මේක theory තනිකර, right? The application of theory, no calculation there. Then you will be tested standard costing and variance analysis, right, for 15 marks. So we had 2 major activities regarding standard costing and variance analysis, right? So you will be asked to calculate some variances, right? Variance calculations ටිකක් එනවා. ඒකේ you should be familiar with the variance formulas, right? Variance ටික මතක තියෙන්න ඕනේ. මොකද formulas ටික හම්බෙන්නේ නැහැ, right?